Welcome to the Swing Trading with Cycles channel. We're going to do our update on the Dixie today. It's July 30th, 2023. And as we've been saying, the Dixie is in long-term cycle decline. This is actually month 30, July, which is closing out, obviously. We have our August candle starting on Tuesday. This is being recorded on a Sunday. It's entirely possible that this actually was the long-term cycle low. So after topping out on month 20 of its 3 year cycle, of its long term cycle, you don't have to quibble about the time. But this was a nice long 20-month rally, and we've now since then had a 10-month decline. And really, it was a big steep decline here, and then since then it's just consolidated here. And so if this was more like other 33-year cycles, we'd continue to decline for another 5, 6, maybe even 7 months. You can see this one was 35 months, but this one was longer at 45. This was 36 on the dot. This was 38. But it's possible we have a shorter one, right? The levels become very clear here, though. So again, we have a new monthly candle opening on Tuesday, and the levels that we need to stay above become quite clear here. So think about this. Because of the shape of this candle, we are going to get an inside candle for August to open. Doesn't We're gonna have to see how it closes, obviously, but the August candle is going to be something like this. And if we are in a bullish daily cycle and potentially a new weekly cycle, this would try to drift to the higher end of the range. So to be clear, that's going to be a range between 103 spot 572 and 99 spot 578. So a pretty big range, especially for a currency, the world reserve currency at that. And so we're going to watch for that on this monthly chart because this has all the appearance of a bear flag, right? You have this big move down and then there's a pause. Price catches its breath before the next dump lower. But we see what appear to be bear flags break up all the time. It just happened for crude oil. I'll just go to that video really quick. I'll just go to that chart really quickly. I have a separate video about that. The natural gas video actually touches on that. But look at this bear flag, just like a sort of classic bear flag that actually kind of broke up more or less. We'll just reset this view. Is that the weekly? Right. So you have this big move down and then this just consolidation, which has all the appearance like this is like price catching its breath after this big dump so it can dump more. But then it does exactly the opposite. Now, it still has to get above here to be clear, to not be a lower high. But the point is, sometimes the pattern that you think is going to play out is not exactly what plays out. So we want to be careful and focus on the levels. Now, speaking of the weekly chart, this is your weekly chart for Dixie. And the week of July 10th, that's when we made that low right below 100, 99 spot 578. That may have been a weekly cycle low at week 23. It was a pretty sort of like, the cycle topped out on week 5, but we didn't get a crazy decline in terms of price because we did get a nice decline to start, but then price basically just kind of made up a lot of that decline, but then essentially went nowhere. So we more or less meandered sideways more than anything. But that would mean that we just completed week 2 of a new weekly cycle potentially. But to be clear, because we're in long-term cycle decline, if we're going to get that, 36-month cycle, something like that, what we'd actually expect is, we had this big move down. Then we had this little fake out up. That's a lower high. This was a fake out lower. You thought this was going to dump, but it didn't. Then we get another lower high. Now we got a slight lower low. There's no reason we couldn't do something like this, fake everybody out, and then do something like that, right? Like really dump into the long-term cycle low. That's not a prediction, to be clear. It's just a scenario that one has to be aware of because it's very likely that we're going to continue to decline into the end of the year, into that longer term cycle low. And so if this is a new weekly cycle, you'd be looking for the weekly cycle high to get short like this right here. Again, this didn't play out so well. Obviously, this was a great opportunity to get short this weekly cycle high because that's when we got the sort of real dump. And so that's your weekly chart. And if you go to the daily, you can see we have this pretty massive waterfall decline down here. And now we're trying to rebound. Notice we haven't made up, have we made up half of the decline yet? Let's see. So we dropped about 4 points. And so far, okay, so we've made up about half the decline and we're consolidating here. Again, if this is a new weekly cycle, then we would expect this advance to be more bullish, to at least give us a few more weeks of rally. And so that would suggest that would make it more likely that this would continue to at least try to retest the $103 area. That's that sort of level. But again, that becomes your opportunity. You know, once we get the signal that this thing is starting to roll over, that the weekly cycle is starting to roll over. I guess one way of thinking about it is the weekly cycle, the daily cycle high for this daily cycle could also be your weekly cycle high. Like, let's say we get another 2 weeks of rally. So that's another 10 days of rally here. And then we top out, start our daily cycle decline, which actually starts the weekly cycle decline again, like that path I drew, as a scenario, for instance. So that's the Dixie. And you think about all the things that are correlated to the Dixie. If the Dixie is going to move lower, those things are going to move higher, like gold, other potentially Bitcoin. And speaking of just thinking about what the broader market, that's something that tends to move higher as the Dixie moves lower. Again, it's all relative. It depends on exactly why the Dixie is moving lower. There's some cases where that may not be the case, but man, this thing has been rallying pretty aggressively. Last week was week 19. This is your weekly chart for the S&P 500. And so at some point, we're expecting a multi-week pullback, a pullback into a weekly cycle low. We would expect that we're going to close below the 10-week moving average. Look how stretched this thing is above the 10-week moving average at this point. So, right, like that is generally, like, you can see, like, this whole time, that's not that much of a difference between that. This is obviously going to pull back at some point, but it's just a question of waiting for the right signal. And I look at the cues. I was in a really small short. I got out with a little loss, right? Like, look at this chart. I mean, look at this. This is a pretty, like, forget this candle for a second. Just remember this candle. That's a very bearish signal, right? But of course, you always need follow through. And so what you would have expected this weekly candle to do is something like that, right? Like, this thing closed on the lows. Instead, it did the opposite. Now, it didn't make a higher high yet, but it seems very likely that we are going to make a higher high above here, so above 388, even if it does turn back. So the S&P, notice, made a higher high on week 19. The Qs didn't quite get there. Again, I think the same fate remains. At some point, a pullback below the 10-period moving average, the 10-week moving average, pull back for a few weeks, and then a swing low will signal the start of the next weekly cycle, which will take us in all likelihood back to all-time highs and beyond. And so that's what you really want to be watching for, in my opinion, that opportunity to get back into the market, like get back as part of that swing low, that next weekly cycle rally. So that's the update on the Dixie. I'll do a separate video about gold and precious metals. Thank you for watching.